Hello, this is Cryptolyze. I hope you are well on this Thursday, 23 November 2023. We're meeting today to talk about Blast, so this is going to be a bit of a special video because it's not really a crypto analysis. Not to talk about it, it's really going to be more of an opinion in relation to what is happening. And what is going on underneath, and in which I would like to make you aware of the notion of marketing manipulation and what is being done. That doesn't mean it's not a good plan, it just means that you have to pay attention to how it presented itself. What's happening behind it? Do we have an interest or not? I will explain all this to you now. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth 400 euros, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. So if you've been hanging around on Twitter for 48 hours already, you must see Blast hanging around everywhere. So this won't mean much to you if you're not really on Twitter, but you have to understand that it's noted as being a layer 2 of Ethereum, which is in the process of being launched. It is not launched. There is no beta. There is nothing. It's just early access to farm a possible airdrop. So possible being very relative, it is that the airdrop really exists, and that they announced that there was going to be an airdrop. We do not know how much, nor what, nor how, but in any case we know that there will be an airdrop. Where does this blockchain come from? Who is behind it? What is happening? That is a bit the subject of this video. And is it worth it or not to be interested in this project and what is happening and sorting out the truth? And overall, I am pushing you to press the buy button without necessarily taking a step back. So on this, once again, it will be my personal opinion compared to what I have known, and we will separate two things. One, the notion of technology. Two, the concept of speculation. So don't look anymore. There is no Blast token. There isn't one yet. The airdrop hasn't happened, so there's nothing to buy. If you click on something that telling you to buy Blast means you are being scammed. So be careful about that. It happened on Twitter like a wave, at least in my feed, and I wondered what that was and where it came from, especially since we saw that there was Paradigm behind it. Who is Paradigm? It's an investment group. It's a VC which specializes in tech for the most part, and which still finances a lot of things, and there we have Paradigm and Standard Crypto who are behind Blast. So it's our two VCs who have raised $20 million. Okay. 20 million for an L2 is not much. We're not going to hide, it's really very, very little. When we look at OP Arbitrum, when we look at Starknet, when we look at the big guys who really bring value, we say to ourselves that it's relatively weak. The question is, why only 20 million? Well, already because I strongly think that they don't necessarily need a lot of development. For what? Because they are on an optimistic roll P. And I even think that they are potentially on the OP stack, therefore underlying the optimism stack and therefore behind very little development because everything has already been done by optimism and their development stack, which is really well done and which allows you to develop DLTW blockchains very easily at the Ethereum level. So I'm asking myself the question, that's a hypothesis. Okay, it's not something that is acted. This is my question in relation to development. 20 million is really not much, especially when we are pushing an airdrop. When we are pushing marketing overall. Marketing why? Because the blockchain has not arrived. The tech is not there. The early access is not there. The beta is not there. And on the other hand, we are already talking about an airdrop which is going to happen, that we can start farming now, in which we deposit TVL. They made in 48 hours, 230 million TVL. So total value lock. These are people who blocked their money. So, we were at 230, and now how many are we? 273 for 40,000 users, which is huge, really huge in terms of time. And why do we have this? Because the narrative around that is generating native revenue directly on the blockchain. This means that you own assets on the blockchain, you are directly paid for these assets, in particular Ethereum, you touch 4. So we're going to find that I think I'll find them pretty quickly. I'll find them there. Overall, we have 4 for Ethereum, we have 5 for USD. Clearly, how did they build this? It's quite simple. It's the same principle as Lido. They're going to offer liquid stacking. That's it. 4 for Ethereum, 5 for stablecoins. This means that they will take your ethers. They will stack it. And they will recover the yielding, less a portion of commission. Well, they don't talk about that. But I think there will be some commission in all cases. And on the other hand, they will pay you that. So that means that you have your ethers which are on the network. But in fact, you do not have your ethers which are on the network. You have a copy of these ethers which have a value because they are stacked on Ethereum. And that's the principle behind it, and it's the same principle. The 5 on stablecoins is a bit the same thing. We're going to find ourselves on protocols that already do that on Ethereum or on other blockchains, which will take your stablecoins, will buy ethers, will lead them with an inverse position, and will extract the percentage with an MEV, maximum extractable value, which allows you to output much more than just 3 to 4, which allows you to be around 7, 8 by actually optimizing transactions within Ethereum blocks for validators. So we are in this approach where, in fact, we are creating a protocol. No, we are not creating a protocol. We are creating a blockchain, which looks like a protocol in which we have attractions, but which are not attractions linked to the blockchain itself, okay? It's not because it goes faster and costs less. We don't know anything about that. We don't have any information linked in any case to the protocol itself and the way in which it was carried out. The decentralization, how much a node costs, how it is carried out, etc. We know 3 things. 1, that we are paid by depositing ethers and stable coins. A remuneration that we can also find by doing something else. 4 on ETH is really not much. 5 on stablecoin is really not much when you are able to optimize your DeFi yield, but it's really not much. So we know that we have that, and above all, we know that we are investing in something that has a one-way return. What does that mean? This means that we will not be able to go back until the blockchain launches, or until we are talking about February, but we do not have a real date. We will not be able to withdraw our funds. So in fact, we deposit our funds against a yielding that we will have later, which will be released later. It's the same principle, that is, I cannot recover the funds, I cannot recover the yielding, and little by little, at that moment, I will go. I like this curve where we say blast reward and blast normal, and we have the others, L2. Yeah, except that in fact it's just that they implemented a protocol layer within the blockchain. Is that smart? I definitely think it's smart in terms of remuneration for the blockchain itself. I think it's even very, very intelligent in the sense that, in fact, they added a layer of protocol by saying, okay, well, I take your assets, I place them directly. And behind that, I give you back some yielding. I take back a small part, and that adds up to my financing costs. So that means I can even offer free 100 free transaction fees because I get paid that way. And there we have another financing system at the blockchain level which is really very intelligent and which allows us to evolve. Especially since behind it we are going to have 2 other things. 1, the native yield. Okay, the gas fees income. So there will certainly be income, in any case waste, which will be paid. But in any case, the income will not be taken by Blast, but are taken for the developers. Same principle. What is the goal of Blast? It's about having as many people as possible come and deposit their TVL because they will receive a percentage on the money that is deposited on the network and not on the transactions. So their income will be that. On the other hand, for whom of the people who come to testify? Well, what is needed? You need applications, and therefore to have applications, you need developers, and therefore to have developers. You have to pay them, and hence the interest is that we have waste, which is at 100 above, and airdrops, which are exempted. Therefore, 50 airdrops. Well, we strongly suspect that the airdrop will certainly be something that will be ultra-mega speculative based mainly on anticipated future revenues on the yielding that is put in place. So it's a bit complicated to explain that, but I will certainly make another video on it. But I think that we will have a form of speculation a bit like the bundle which will be put in place on the airdrop in question, and therefore, inevitably, we will have a valuation of the blockchain in herself, in which, above all, we have an auto-abasing system which allows us to increment the number of ethers in relation to the yielding which is given, which is rather something classic. Loan stacking is what I explained to you. And the T-yield, they explain that it is a little different. That is to say that they will give you USDB, which is their own stablecoin, which is algorithmic, which is self-basing. Be careful. Be very careful with that. Once again, here we are in something that is different from what we have known. But that does not prevent us from being on an algorithmic stablecoin, which is based on MakerDAO and therefore the DAI behind, and in particular the notion of TIL. Therefore, TIL is the US bounds in this case, which are made available. This implies that we are exposed behind to the jump of the American Treasury, in which we have a rate which is between 4 and 5. So for me, we are still in something else, but there we still have a relatively high level of risk. So if I have to summarize, we have a blockchain which is technologically almost identical. On the other hand, in terms of operation and remuneration, we are on a new business model, which for me is very interesting. Is it worth putting money on it? Absolutely not, at least as it stands, unless you want to farm the airdrop. Do I think the airdrop will bring in a lot of money? It's up to you to see, yes or no. You think that airdrop may be worth taking the risk of immobilizing your assets for X amount of time in a protocol that you do not know and which is managed by a team that you know but without necessarily knowing. The people who are behind Blast, we clearly recognize, are the people who are behind Blur. And to give you an idea, Blur are the ones who led to the reduction of OpenSea to 50 in its workforce. Understand that Blur has exploded the NFT market, finally NFT marketplaces, by cannibalizing the volume with a very, very strong notion of gamification, in which in fact we pushed people to farm the airdrop, thanks mainly to making transactions on Blur, and therefore by cannibalizing what? Well, the volume, and so they cannibalized all the volume while remaining very, very little volume on OpenSea, and therefore the OpenSea ecosystem, which was based on the fact of being able to offer an on-demand marketplace by taking girls on it, has almost disappeared because the business, Blur's model, was with almost zero girls, and he based it on that. And Blast is setting up a bit of the same thing. Are they going to cannibalize all the momentum? It's possible, but at this point, is it the Blast token? Which will be interesting, we don't know. Personally, I started to look at the elements a little. I'm missing too much information to be able to see, because for me, I'm missing too much information on tokenomics in particular. I'm missing some information, well, really way too much information, and you should know that currently we can bridge now, but in any case, we will only be able to get some out in February, and even then, if everything holds up well, etc. And in all cases, the airdrops will be distributed in May. Once again, airdrop, we don't know. If you ever have more information, don't hesitate to put it in comments and descriptions. I'm interested. I'll make another video anyway. I'll do it quickly to avoid you being fooled, particularly for the notion of marketing, where we have the impression that we have yielding which is offered. Once again, there we push you to farm an airdrop. We push you to lock up your liquidity. Be aware that the liquidity which is locked currently you are not going to touch. The profits before February, if it ever launches well in February. And why are they doing this? Quite simply because they will recover the profits that are generated by what is rented. So imagine that there are 280 million who are rented. If they only take 2 or 3 for the year, that's already a very nice sum to be able to start developing for something which has raised only 20 million. So imagine if they reach 3-4 billion. Something which could very well happen in the coming months, or at least the weeks, given the very rapid evolution that there is, and especially that they are specialized in marketing. We see it clearly in the way they communicate. We have some referrals that have arrived to farm what? Airdrop farmer. Once again, the airdrop, we don't know the number of tokens, we don't know the inflation, we don't know the distribution, we don't know not everything related around that. So we are really in an ultra-viral marketing campaign specialized in the notion of speculation. And anyway, we can see it clearly. When we look here, we have Dajin, Spartan, and Santiago. We know very well they are specialists in Dajin at the DeFi level, so they are hyper-speculators, and therefore that means that we are in this process. Just be very careful. It can be very interesting, once again, for those who know how to do it, who understand the dangers, who are not afraid of this type of protocol, who are not afraid of losing a lot of money by relation to what is going to happen. So just be very careful. Once again, it's me who gives you. I hope you enjoyed this video. If so, don't forget to leave me a like and a comment. It supports me and the work I do every day. And if you are ever interested in this project, come on Sunday, 26 November to 20 on YouTube. There will be a live broadcast to celebrate the channel's 2 years and 30,000 subscribers. And at the same time, we'll talk about Blast, I think. If you ever have any questions, don't hesitate. This will be the time to discuss together. And I'll see you tomorrow. 7 for the daily.